Is Florida housing heading into a buyer's market in 2023? That's a question on the minds of many would-be home buyers. I was speaking with some people recently about the real estate market in Florida. They said they were planning on buying a home, but were waiting for interest rates to come down and the market to shift to a buyer's market. They heard that the market was heading for a crash and would soon be better for buyers. I asked what they meant by a buyer's market. They replied the same as most people do. They said in the buyer's market they could get a better deal due to less competition from other buyers. I then asked what they would consider a better deal when purchasing a home. Of course, they said they would be able to negotiate a lower price, which is true. In a buyer's market, there is less demand for housing and homes sit on the market longer. The longer the home sits unsold, the more willing the seller is to lower the price. At first glance, this seems to make perfect sense. Buying something at a discount is always a great deal, right? Or is it? Hi, I'm Lucian Valancourt, broker and owner of Native Sun Realty here in Jacksonville, Florida. Today we're going to explore what a buyer's market is, the last time Florida was in a buyer's market, and where values trend during a buyer's market. But first, if you want to see more videos of real estate related stuff, you need to subscribe and click the notification bell. Thanks. Okay, so what is a buyer's market? Simply stated, a buyer's market is where there is a greater supply of homes than there is demand, and buyers have an advantage over sellers. So how do we measure the supply and demand of homes and determine whether we are in a buyer's or seller's market? This is done by calculating the absorption rate, which is the number of months it would take to sell all available homes for sale by the number of sales the previous month. For example, if there are 1,000 homes available for sale and 200 homes were sold last month, then it would take 5 months to sell all available homes. The absorption rate would be 5 months. For the sake of this video, let's refer to this as inventory. So what amount of inventory is considered a buyer's or seller's market? Let's check the scales. Less than 6 months is a seller's market where there is more demand than supply. There are more people wanting to buy homes than there are for sale. This gives sellers an advantage over buyers when negotiating a price. Jacksonville's inventory is currently at 5.08 months as of January 2023, which puts us in a seller's market. So what happens to values in a seller's market? Looking at this chart, we can see that Jacksonville entered seller's market territory in the spring of 2013 and has remained a seller's market till the present. In April 2013, the average sale price of a home in Jacksonville was $197,284. The average price of a home in January 2023 was $401,566. This amounts to a gain of just over 100% in 10 years. You can also see that as the supply of homes decreased, the price of homes increased more sharply. Homes purchased during this seller's market experienced record-breaking appreciation in value. 6 months is considered a balanced market where supply and demand are equal. In a balanced market, values tend to remain stable or rise at the rate of inflation. Jacksonville was in a balanced market from May 2012 to February 2013. That is a relatively short time. Looking at the chart, we can see that home values are rising more slowly and basically keeping pace with inflation. More than 6 months of inventory is a buyer's market where there's greater supply than demand. There are more people wanting to sell their homes than people wanting to buy them. This gives buyers an advantage over sellers. So when was Jacksonville last in a buyer's market? Looking at this chart, we can see that Jacksonville entered into a buyer's market in July 2006 with 7.26 months of inventory. This buyer's market lasted till about the spring of 2012, where inventory lowered to 6.98 months. So where do values trend in a buyer's market? Well, as we know, buyers can negotiate a lower price in a buyer's market. Let's say a buyer was able to get their home at a 5% discount. Woo! The sale then gets recorded in public records. That sale then becomes a comp and is used to determine the market value of similar homes in the area. The following month, a homeowner down the street decides to sell their home and sets a list price of their home based on that comp. A buyer then makes that seller an offer of 5% less than their list price and points to the data showing that homes are selling at a 5% discount. The seller agrees to lower the price to get the home sold. This situation repeats itself over and over, pushing values down until demand increases and moves the market back into balance or into a seller's market. During the last 6-year buyer's market, values dropped 34%. In addition to a place to live, many people look at their homes as a financial investment similar to a stock. Would you rather buy a stock that is trending higher or lower? At 5.08 months of inventory, Jacksonville is currently in a seller's market, with values that have trended higher for the last 10 years. Wall Street investors have a saying, and that is, the trend is your friend. I don't see any reason to expect a major shift in the Florida housing market. With Florida gaining more population than any other state in the country, demand is likely to remain strong for some time to come. Let's say you believe the doom and gloomers and want to wait for a market crash and values to come down. If your goal is to buy at the bottom and you have a crystal ball that could accurately predict the future, then you could wait for values to drop and for the market to turn around. Remember, the last buyer's market lasted 6 years. While you wait, you have to live somewhere, right? If you're not paying down your own mortgage, then you're paying someone else's. According to Rental Beast, the median rent for a 3-bedroom home in Jacksonville is $1,800 per month. That's $21,600 per year. In order to come out ahead, home values would have to drop more than your annual rent payment. If values only flatten or drop less than your annual rent, then you're in the red. And don't forget the supply and demand factor. Fewer buyers equates to more renters. More renters increases demand for rental homes. And as we know, demand drives prices up. Will your landlord keep your rent the same or increase it in response to the greater demand?
That's right. Come on. Keep it coming. Keep it coming.
My point is, waiting can be costly. The longer you wait, the more costly it becomes. My advice to anyone who asks is not to try and time the market. In other words, it's always a good time to buy a home if you can stay in a home for at least 3 years and can comfortably afford it. Many people believe that higher interest rates are going to drive prices down. Historically, that's just not been the case. I'll show you that in the next video soon, so be sure to subscribe so you don't miss it. Till then, this is Lucian Valancourt with Native Sun Realty, helping you find your place in the sun.